Hello and welcome to the final of the IAASB's three-part video series on our proposed revisions to the Going Concern Standard ISO 570. My name is Josephine, I'm an IAASB board member, and in this video I will be focused on our proposals to address calls for greater transparency about going concern in the auditor's report. If you have seen the first of our videos, you will have already heard from Ado on some of the proposals in respect of transparency. But we thought it would be helpful for our stakeholders to understand some of the more important reasons as to why we are proposing changes to the reporting requirements, and of course what those changes look like. So firstly, why are we proposing changes? Well, as you have already heard in our video series, in early 2020, the IAASB commenced information gathering and research activities on going concern, which included a number of roundtable events, some outreach, and the development of a discussion paper on both fraud and going concern. During this research phase, our stakeholders made calls for greater transparency and provided various suggestions about what additional information is needed in the auditor's report to enhance transparency about the auditor's work and responsibilities related to going concern. Respondents specifically highlighted the need for more explicit statements regarding going concern in the auditor's report and more information about the nature and extent of the auditor's work, as well as the results and any significant findings. In addition, it was noted that to the extent that auditors were already communicating information about their work in relation to going concern in the key audit matters section, stakeholders suggested that similar reporting should be included in the material uncertainty section. In fact, some stakeholders noted that it was disproportionate that the material uncertainty section might have less commentary about the auditor's work effort relative to communicating information in the key audit matters section when there are no material uncertainties, and therefore, potentially, the material uncertainty section could be perceived as having less relative importance, which was really a concern they wished us to address. Another matter raised by our stakeholders was the need for greater clarity around close calls and other current related reporting requirements. Close calls can be described in various ways, but in our explanatory memorandum, we explain it as a situation where significant judgment was made by management to conclude that no material uncertainty related to going concern exists. So in addition to our research activities, key findings from the auditor reporting post-implementation review indicated that certain reporting matters related to going concern were challenging. Stakeholder feedback indicated that there is a lack of clarity around the communication responsibilities in respect of close call situation. Now, the absence of auditor reporting requirements in ISO 570 do not preclude an auditor from providing further transparency in their report in a close call situation. The auditor may communicate this information through a key audit matter, or when key audit matter reporting doesn't apply, the auditor may include an emphasis of matter paragraph to draw attention to the going concern disclosures in the financial statements. However, it was also noted by some stakeholders that there's a lack of clarity with respect to the reporting requirements and the interrelationships between the different reporting requirements for key audit matters, the material uncertainty paragraphs, and the emphasis of matter paragraphs. Stakeholders also highlighted the need for consistency and comparability across auditors' reports globally when matters are being reported in relation to going concern. The board is aware that certain jurisdictions have already implemented positive changes to their national going concern standards to improve transparency about going concern in the auditor's report, and there are some jurisdictions currently exploring the need and options for additional disclosures in the auditor's report, and that include matters related to going concern. So in developing our standard, we also took into account the positive changes made by national standard setters. Since the board's remit is to develop high-quality auditing standards, the focus of the Going Concern project that was approved in March 2022 is, of course, on standard-setting activities. However, the board's actions to address the issues that have been identified by our stakeholders also included exploring the development of non-authoritative guidance. So, to specifically address some of the issues raised by our stakeholders regarding the interrelationship of the material uncertainty section, the key audit matters section, and the emphasis of matter paragraphs, the Going Concern Task Force developed guidance to address some of the common questions related to reporting going concern matters in the auditor's report. The guidance was released in August 2022, and whilst there was still a need to address confusion around those interrelationships directly in the standards, this frequently asked question guide hopefully helps our stakeholders navigate the requirements in the current standards. So in terms of the proposed revisions to the standard, there were three key areas of change. First, we have introduced requirements for the auditor to make explicit statements in all auditors' reports about the auditor's conclusions relating to going concern. Auditors are already required as part of their responsibility to draw these conclusions, but they are not currently required to report them. Now, when the revisions were proposed for the going concern standard as part of the auditor reporting project in 2014, the IAASB did suggest that explicit statements could be made relating to the appropriateness of management's use of the going concern basis of accounting and whether a material uncertainty had been identified. However, there were mixed views about the need for such statements at that time, and the idea was not pursued. However, since the IAASB concluded on that project, stakeholders, including the IAASB's public oversight body, continue to support the importance of these statements in the public interest and articulated that support in response to the discussion paper. Accordingly, the board are now proposing two explicit statements to be made by the auditor. The first, that the auditor concludes that management's use of the going concern basis of accounting in the preparation of the financial statements is appropriate. And the second statement is required in the situation where there is not a material uncertainty, that based on the evidence they've obtained, that the auditor has not identified a material uncertainty related to events or conditions that may cast significant doubt on the entity's ability to continue as a going concern. The board believes that the proposed requirements offer greater transparency to users, that the auditor has fulfilled their responsibilities. The proposed revisions also include some changes to the auditor's responsibilities in respect to reporting matters related to the material uncertainty section. In response to stakeholder comments I talked about earlier, that the material uncertainty section may be potentially perceived as having less relative importance, the board believed it was important to maintain the prominence of the material uncertainty section in the auditor's report because it would not be in the public interest to blur the line between a commentary related to going concern when no material uncertainty exists and when a material uncertainty does exist. So this section continues to clearly state that a material uncertainty exists and requires a very clear heading to that fact. The other new requirements for this section include, as I mentioned earlier, for all entities that the auditor provide a statement that they have concluded that management's use of the going concern basis of accounting in the preparation of the financial statements is appropriate and a material uncertainty exists. To make it clear, this is not a modification to the auditor opinion. The auditor is also required to state that the auditor's opinion is not modified in respect of the matter. Now, for listed entities, in response to comments for greater transparency, the auditor is required to provide a description of how the auditor evaluated management's assessment of going concern. The board believed there is a clear public interest benefit in providing more informational content about the auditor's work and inclusion of additional commentary about going concern in the auditor's report. Similarly, for audits of listed entities where no material uncertainty exists, the auditor is required to provide a description of how the auditor evaluated management's assessment of going concern, and this would be provided in a separate going concern section of the auditor's report. The absence of auditor reporting requirements in extant ISA 570, as I mentioned earlier, does not preclude an auditor from providing further transparency in the auditor's report about their work in relation to going concern. In many situations, we have seen auditors provide this information as a key audit matter in audits of listed entities. Auditors may have chosen to do this in what's commonly called a close call situation, and indeed may even use an emphasis and matter paragraph for non-listed entities that draws attention to management's disclosures in a close call situation where the financial reporting framework encourages such disclosures. But you will recall that I mentioned that different options and the interrelationships between the reporting requirements were causing confusion. So to address this matter and the desire for greater transparency about the auditor's work, when events or conditions are identified that may cast significant doubt on the entity's ability to continue as a going concern, the auditor is required to provide a description of their work, including drawing attention to disclosures about events and conditions in the financial statements, if there are any. In respect of the financial reporting framework, it may not necessarily be the case that those disclosures are required. The board is of the view that this new approach to enhance transparency in the auditor's report will support consistency and comparability of auditors' reports globally. This is a summary of the key changes I just discussed, and this is a good time to mention why certain requirements are only in respect of audits of listed entities. It was noted by the board that intended users of listed entity financial statements do not usually have direct access to auditor communications with management about their work, including in relation to any issues identified in the course of an audit or going concern related matters. For those users, therefore, the board believed there is a clear public interest benefit in providing more informational content about the auditor's work and inclusion of additional commentary about going concern in the auditor's report. For other entities, the board believed that the intended users may have greater access to this type of information through close interaction with management or those charged with governance, thereby obviating the need for additional commentary. This is consistent with the board's conclusions, in fact, in relation to the key audit matters standard only being relevant to audits of listed entities. There may well be circumstances where intended users of non-listed entities may include lenders or other creditors that may not have access to information about the audit beyond the financial statements and the auditor's report. However, the IAASB are of the view that in such circumstances, akin to communicating key audit matters, the auditor would not be precluded from voluntarily including additional commentary in their auditor's report. Now, ISO 701 deals with the auditor's responsibility to communicate key audit matters in the auditor's report. And that ISO does note that a material uncertainty is by its nature a key audit matter. However, as I mentioned earlier, the board intends that all matters to be communicated in the auditor's report regarding the auditor's conclusions and work related to going concern should be addressed together in a separate section of the auditor report. The board believes that the alignment of the going concern commentary in this manner enables greater consistency and comparability and also eliminates the need for users to have to navigate through various sections of the auditor's report in order to access relevant commentary about going concern. So that separate section shall either have the heading going concern or material uncertainty related to going concern. In this regard, therefore, the proposals do clarify that for listed entities, when commentary is to be provided by the auditor, then ISO 570 addresses the implications for the report and not ISO 701. There is also guidance in the application material that supports the application of the new transparency requirements. Regarding the description of how the auditor evaluated management's assessment, the board have provided guidance on what the auditor might wish to include in their commentary regarding their work, such as an overview of the procedures performed and an indication of the outcome of those procedures. And there's also guidance on the amount of detail to be provided and guidance that helps the auditor avoid the use of boilerplate language and descriptions, specifically highlighting that the description of the work should be relevant to the specific circumstances of the entity. Now, recognizing there may be situations where the financial reporting framework does not require management to disclose information about events and conditions when there is not a material uncertainty, the IAASB have included guidance about avoiding inappropriately providing original information about the entity. Certainly, the guidance goes further to say that if the auditor believes that it is necessary to include such information, then the auditor can speak to management or those charged with governance about including disclosures rather than the auditor providing that information in the auditor's report. In addition, to alleviate the risk of providing original information about events and conditions that may cast significant doubt that are required to be disclosed by certain financial reporting frameworks, the board focused the requirement on describing how the auditor evaluated management's assessment and not specifically on the events and conditions themselves. In doing so, the requirement remains focused on providing a description of the matters in the context of the audit. We've also updated the current illustrative auditor reports and developed new ones to demonstrate the statements and descriptions that are required to be included in the auditor's report for both listed entities and non-listed entities. So hopefully that brief overview of the proposed revisions and the support behind them will be helpful to you in formulating your feedback. Your comments and views are vitally important in helping the board develop a more robust standard that addresses the calls for greater transparency in the auditor's report. The closing date for the consultation is the 24th of August, and if you need any further information, including how to submit your comments, please visit our website at the web address on the slide. You can also follow us on Twitter, LinkedIn, and YouTube, and do register and subscribe for updates if you haven't done so already. That way you can get the latest news from the IAASB. We very much look forward to hearing from you, and many thanks for your attention today.